Hello, my name is Mark Chalmers, and I'm President and CEO of Energy Fuels. And Energy Fuels is a very unique company. There's no company like it that I know of in the world. We're focused on critical minerals production in the United States of America. Those critical minerals are uranium, vanadium, and the rare earth oxides used for electrification and reducing carbon emissions. And I'm very excited to be here today to talk to you about some of our very exciting opportunities, and particularly with an update on those opportunities, because a lot has happened in the last couple of weeks, Matt. And I'm just tickled to be here to talk to you today.
Well, I bet you are. I saw the headline, because we've been talking about it for, the last sort of, 6-9 months, which is, where do you secure large amount of monazite from? Do you think you've now solved that problem, given the recent press release?
Well, I think we've taken a major step. I mean, we've got binding agreements on acquiring a very large project in Brazil called Bahia, in the Bahia province of Brazil. We think it's part of the puzzle. It's not all the puzzle, but we've entered into these binding agreements. We have to do 90 days of due diligence just to confirm that we're purchasing what we think we're purchasing, but we have very high confidence that it's going to be what we want it to be. For the last couple of years, when we mentioned we're going to get in the rare earth business, people said, well, where is your mine? And we didn't have one. So now we've got binding agreements for a very large deposit of heavy mineral sand containing monazite. So it's a very important step. And it has the potential, we believe, and we've got to confirm this, between 3,000 to 10,000 tons a year of monazite because of the size of the deposit. That would put us well along our way to having our own sources. Now, we plan to complement that with sources from others. We've got an agreement with Chalmers. We've got an MOU with Hyperion X that has a project in Tennessee, and we're still talking to people around the world. But the ultimate goal, world scale in size, world class in production cost, operating and capital costs. So yes, what else can I say? It's exciting. I've told our investors that, I hope to provide more updates on where the monazite's coming this year. And this is one of the big ones, the first big ones. I believe there'll be other news flow in the coming few months.
Okay, so tell me, you said there's a 90-day DD process you got to get through. So I assume there's some historical data, some historical work that's been done on this, and that's what you're basing this off of. But what's the chance of success that you attribute to this?
Oh, look, I hate to put a percentage on it, but we certainly didn't put $2.7 million non-refundable deposit because we thought the chances were high it would fail. We have done some preliminary testing. We have done some preliminary sampling. We have sent that out for analysis. Analysis looks very good. We've got to do a bit more sampling, because again, 60 square miles, very large land position. We were going to do some more sampling in this 90 days, starting in the next week or so. And we have high confidence, but we want to make sure that what we think we have is what we have. And I give it a really high probability of closing. And we put a very large deposit down with that belief.
Okay, so we had Chalmers, and you say this is part of the solution, but perhaps part of the solution. You got Chalmers there. Any sort of news in terms of further conversations or further deals to be done with Chalmers or others to kind of bulk? Because the scale is so important to this. You talk about world class a lot. To do that, you're going to need a lot of this feed into the plant, right? So is there more to come?
Yeah. Look, we're talking to a number of parties, and when we talk about we're replicating the China plan. I mean, China has probably 10 to 20 different suppliers of monazite to their plants in China. So we're not going to do this with one project. We're going to do it with a number of projects, but we think this one is one that's very material that could be maybe 25 to 50% of our requirements in due course. I mean, just as an estimate. We have a very good relationship with Chemours, and we're still getting the material that they have out of their Georgia plant. They have underutilized facilities, and there are other people that are talking to us with their facilities as well. So look, step by step, I've got to show the market that we've got all these stars aligned, and go from there. But again, having White Mesa permitted, constructed, currently producing carbonate that can be shipped anywhere in the world. And Matt, I just want to bring to your attention, we're also making NdPr right now. This is 99.8% pure NdPr that we're making continuously right now in the laboratory at White Mesa, continuously running at 24/7. Our confidence is going up by the day.
Okay.
Leaps and bounds.
US's newest producer of rare earths. Well, that's good news. But let me, and I'll come back to that. That's to be commended, but it's at lab scale, right? So you've got to feel, and your team's got to feel that you can move this through to show that you can do that at commercial levels. Again, scale is everything here. So let's just talk about money for a bit. So this deal in Bahia in Brazil is $27.5 million. You're committing to that all in, but if it all goes ahead, there's going to be some capital capex required for that. So you're kind of committing to your own mine, but it's going to take some money, and you've got some money in the bank. You're committing money to build out the whole rare earth complex at White Mesa. That's going to require some capital. So can you just give me a sense of the margins involved here, the potential upside here? Because it sounds like a whole bunch of money going out, but do you make money, and when do you make money?
I've been saying for a long time that the capital expenditure at White Mesa with the upgrades is in that $200 to $300 million range. All right. And with the acquisition of Bahia, assuming we complete the due diligence and we're confident that it's what we think it is, which, as I said, high confidence, we think we're still in that range, probably on the upper end. But I believe, and again, I have to be careful because of disclosure and different requirements with the exchanges and stuff. But I think that this project alone, if it meets what our beliefs are, I think it could justify full integration in the United States in due course. Okay, but I have to be careful there because that's just what I believe. I can't say that in absolute. So it is very, very material, and the values that are generated are really in the integration of the rare earth supply chain. It's not just in making the heavy mineral sands. Obviously, for us, it's focused on the monazite, the proceeds on the monazite, making the oxides. And you talk about, we're making this 99.8% NdPr in the laboratory, but we're making almost 35% pure carbonate NdPr right now commercially. All right. And we are doing the first stage of separation, small commercial, taking out the lanthanum that makes a very high purity carbonate. So step by step, we're going forward. And we have got so much information on the costs, the recoveries, the reagent consumptions, the handling of the material. I don't know anybody in North America like us that is as advanced in the technical knowledge to come up with a successful outcome. So if we can't do it, ultimately, who else is?
Well, no, I get that. I get the whole, White Mesa, the critical minerals hub for the US. That's a nice positioning. It's just I would like to understand sort of timing as to when you can start giving guidance to the market about, when are all the moving parts in position to be able to, monetize it, right? Start producing this and selling this. What type of returns are we looking at? Because you're talking about some pretty big numbers, but I'm guessing that there's some pretty big numbers at the other side of it once you've sold what you're producing to, or you wouldn't be moving forward. So what do you think the timing is in terms of giving guidance?
Well, we've been talking around 3 years or so. Now, it doesn't mean that we can't do an intermediate step here. That intermediate step is driven on having the monazite to process. Pure monazite with those kind of grades of NdPr is very marketable right now in this world that we're in. And if we had if we secure, and we're out there looking to secure more monazite, like within the next 6 months or a year, so we can get it to the plant, we can make that into carbonate and we can turn that into revenue. So, I believe there will be a few steps here that will show to the market that it's not like a dead stick for 3 years or 4 years until we get up the full integration. We can make revenue off of the carbonate and the rare earths program as we develop it and expand it further downstream, but also the uranium business. Okay. Look at the uranium business. It's improved dramatically. And in the last 2 weeks, we've signed 3 major contracts for uranium purchases from 2023 to 2030 with significant U.S. utilities. Okay. And I think, this could be up towards of 4.2 million pounds. I'm excited about that because that's also a revenue source. So, there is no peer to energy fuels. We've discussed that. You either invest in a uranium company, you invest in a rare earth company, you don't get both. So, yeah, it's exciting. We've got a lot of things to do. We got to show the market that we can get to positive cash flow quickly, but we have a number of bridges that help us get there. And uranium is one of them. Vanadium is one of them, as is making a carbonate as we move to oxide. So there's nobody out there that I know that can actually say that. Matter of fact, I'm pretty confident there's nobody out there that can say that. If there is, please let me know who they are.
We've not found them. Don't worry. Okay. So rare earths, various things. Okay. Well, congrats on the last 2 weeks. More to come. We'll look out for it. I'd love some sort of sense as time moves forward about, trying to understand the economics, and the margins and so forth. Yeah. So just on the long-term contracting. Okay. It could be up to 4.2 million pounds with 3 US utilities. Are we talking about, I assume?
It's 2 U.S. utilities, 3 contracts. Yeah.
Got it. Okay. And is that all going to come from? Well, what inventory are you sitting on at the moment? About 800,000 pounds.
About 700,000.
Got it.
Pounds.
Okay.
We're going to process some alternate feed, another 150,000 pounds ish this year. And we've got other feed out in front of the mill that we can process too. So look we're currently evaluating where the new mining of some of that uranium will come from. We haven't landed on that yet. But we have enough inventory at the mill to fill those contracts, for a couple years, 2 or 3 years, as we fill them. So, there isn't any immediate pressure for us to mine. But we are making investments in doing doing improvements as we speak at several of our mines, improving our readiness, hiring people. We've been hiring people. People are short now with the skills. So as our supplies are short. So we're evaluating how we fill those contracts. We have no belief that we will not fill those contracts, well and above those requirements. And then we'll opportunistically look at, as the market changes, how to build our book. Because one of the biggest mistakes I've seen in the uranium business over my career is when the uranium prices are going up, people get greedy and they say, well, I'm going to wait until it gets a little bit higher before I do a contract. And then there's an adjustment or whatever. So we're going to build the book based on what we know we can make a very material profit on, and keep building it as it goes up.
Right. So I'm assuming, with the US utilities, those contracts don't tend to be public. So what can you tell us in terms of that book building exercise? What did you get a price that you're happy with today, knowing that you've got the inventory component, knowing that you've got some stuff on other stuff on the surface that you can process, and you got mines that you can, which will be slightly more expensive, which you can bring in online. We've heard from US junior uranium companies, the incentive price has been creeping up. 2 years ago, $45-50. Then it's $55-65. I've heard recently more $75. This is a sort of impact of inflation. It's impact of lots of things, I suspect. But and some of that being, I'm not sure some of these companies actually want to get to a point where they need to prove they can get into production, but that's a conversation for another day. But are you getting, or how did you get the price that you need today? And I guess you're suggesting it's not necessarily the price that you'll ask for on the next contract and so forth. But so what can you share with us about these?
Yeah, well, look at what we've done makes sense for us. It probably doesn't make sense for some of the other players because all of our projects are constructed, permitted, constructed, operable. All right. We have inventory that we have on our books at around $24 per pound that we produced ourselves. We didn't buy it. It's U.S. inventory. And I want to say that these contracts, the utilities are interested in U.S. inventory or produced pounds, not pounds that are from Russia or from Kazakhstan. They want U.S. produced inventory or product. We have alternate feed that can be very low cost. In some cases, cost nothing, zero. We get it for free. And when you blend all this together with our projects, with our inventory, with other alternate feed as we put together, we know we can make a very material margin.
Okay.
All those contracts have inflation adjustments and escalated for inflation over time.
Got it.
There are some market-related components that will flex up as the price goes up. There is some market components that provide downside protection as well. We're very confident we will make money on these contracts. Others, in a lot of cases, if they have to go out and build a satellite or reinvest in capital with inflation, that is a double sucker punch on top of operating costs. So this makes sense for us. I think the utilities have come to us because we're a known, reliable supplier. I've been producing uranium for 45 years plus, coming this summer. So we're excited about it. We're going to get the flywheel moving.
Well, it sounds like you are. It's a case of let's just get the ball rolling. Let's get some contracts in place, and we'll just see where the market goes. Obviously, I think a lot of people, commentators, investors, retail investors, looking in at the spot price, it's kind of flailing around a little bit, retracted somewhat because of the market conditions of the last 2.5 months. And that's fine. But going forward, I can't have a conversation with you without talking about contracts with other uranium producers, because you just said to me it's a little bit more expensive for some of these companies, because if they have to build, their build costs have gone up, the cost of money has just gone up, the incentive price will have gone up, and all of these things are become protracted, delayed. So how are other uranium juniors approaching you? Have you spoken to any other uranium juniors? What are they asking for? Tolling agreements, sales agreements? Do they, or have they found alternatives to the White Mesa mill?
Well, we'll start off from our end. Toll milling agreements. Look, I don't think we're going to offer a toll milling agreement to anybody out there. We might perhaps purchase some uranium from people we want to purchase it from, uranium ores for the White Mesa mill. But I do not believe we'll offer a toll milling agreement. We have one toll milling agreement. That's what's consolidated uranium. So I'm not really planning on another toll milling agreement, but I may look at a purchase agreement perhaps. But whoever does that has to, will have to commit to a quantity they'll have to be in full compliance with all the regulatory requirements in good standing, because otherwise we can't afford to tarnish our reputation, dealing with somebody that's not reputable. So, watch this space. We'll do what makes sense for us as our company when it comes to other producers, some of the other producers in the United States, not just in the United States, but around the world. Doesn't matter if you're in Australia, Africa, Canada. They're all talking about two things: shortage of people and inflation. Okay. Those are hitting people like in the back of the head, and they're scrambling. Okay. One of the reasons we want to kind of get our flywheel going is we've got a core of about 110 people, very good skill sets. We want to put all our people and then some back to work to develop that critical mass. And if we can do it sooner rather than later, there's a lot of people that are sitting at mines waiting for perhaps $75 or $80 or something like that. And I hope a lot of them will be working for us in due course sooner, because they can be active. And we have the uranium, the vanadium, and the rare earths. So we have some diversification, which I think is exciting, particularly for millennials. I mean, it seems to be cooler to be in the rare earth business and uranium, even though this whole focus on nuclear energy has changed dramatically in the last couple of years. So look at, we're going to drive our bus, Matt, as we always have, to get the best outcomes for our shareholders. And we're going to work very closely with utilities to help them mitigate, some of the exposure they have with Russia. But we want to work together with them and have, a reliable vehicle for them to do business with.
Okay, I buy all of that. You are, sound like you're in control of your own destiny. The White Mesa plant is a big part of that. What I'm trying to do as a retail investor, family office investor, is to say, I'm hearing a lot of stories out there from other players in your space. Like, we need all the uranium we can get. So I'm not trying to go. It's a competition here. Here's my favorite uranium company. But at the same time, there's a bunch of companies telling me that they're going to be able to sell to US utilities, and the options seem to be, the variables seem to be changing for them in terms of their cost base, access to skills, necessary skills, the ability to process it through a plant. If you're not in the game for toll milling, that very much affects their margins and their ability to control their margins, unless they come up with another option somewhere else. So that's why I'm sort of intrigued about what I should be looking at for in terms of North American uranium producers. So are you taking the view, well, it's not my problem?
Well, look at other producers. Yeah, it's not my problem. Okay, it's not my problem. As I said, we'll look at what makes sense for our company. Okay, and we have the mill, we have the infrastructure, we have the ability to process right now. Anything we process, we're obviously, for others, we're going to obviously get a margin on that works for us. So yeah, I mean, that's all I can say is we're not looking out for trying to subsidize other producers. We're trying to drive our bus, drive it for all the right reasons, because we have the experience to do so and we have the infrastructure to do it now. So just watch the space. I mean, there's still some missing links. As I said, I've been talking about, and I'm flipping back and forth between uranium and rare earths. I said, we got to show the market that we've got this building supply of monazite building for the mill. We've always said that the interest was increasing with U.S. utilities for contracts. Now we can say we got 3 contracts, very material quantities. They work for us. Some of our uranium, like some of the cleanup material that we're getting is for free for us. It's really nice to blend in, a zero cost or $10 a cost, or, currently what we have in inventory at $24 a pound. You blend that in, you blend in some new production, and you can see where you can get a very material margin. I mean, sure, you don't have all the details, but but you got to get a margin, right? And margins are important. All these companies had better start making money at some stage. We know by doing what we're doing, we'll make money on these contracts with the capabilities we have that nobody else has.